Hi everyone. In this video, I'm going to do another installment in my Q&A with Wall Street series. And for this one, we've got Amazon stock and their third quarter question and answer session with Wall Street analysts. So let's get right into it. The first question comes from Eric Sheridan, who's asking about Amazon's revenue guide for the fourth quarter. And the CFO of Amazon responds saying that FX, foreign exchange, is a bigger issue on revenue growth in dollars than it is on our net income. It's actually slightly favorable due to the investments we're making internationally. But compared to the US, it's worse in Europe right now. The Ukraine war and the energy crisis have really compounded in that geography. So sales growth from that region is coming down significantly more than in the US. I would say, although that we had a 28% growth rate for AWS, the back end of the quarter, we were more in the mid 20s growth rate. So that's carried forward through the fourth quarter. So that's not good news. Of course, AWS is the most profitable segment for Amazon, and to have that part of its business growing at a much slower rate in the fourth quarter is bad news for Amazon stock investors. And you can understand why that's partly a reason the stock is down considerably following these earnings announcements. The next question comes from Doug Anmuth, who's asking about free cash flow generation. And the CFO responds, of course, their cost network doubled over the last 2.5 years. They have to get their cost structure back to pre pandemic levels in a lot of areas in the company, mostly in operations. Of course, sales and customer growth surged for Amazon right at the initial stages of the pandemic as people were ordering more often. And so Amazon needed to invest in its capacity to be able to fulfill all of those orders. But now that big boost in capital investment in building out its capacity is weighing on its costs, and that's decreasing free cash flow as customer revenue growth has slowed. And so now, in order to get that business back in line, it needs to reduce spending in that area, let some workers go, and reduce warehouse capacity, warehouse space, in order to bring costs down, and so that at the current level of revenue, there could be better free cash flow. Moving on to Mark Mahaney has two questions on profit, and the CFO talks about a deceleration or a drop in operating margin sequentially quarter over quarter. That's not good news for Amazon stock investors. The biggest issue for the quarter over quarter drop was the increase in losses was the second quarter was tied to some additional operating costs in Europe. They've seen higher fuel costs there, even more so than in the US. So if you think it's bad in the US in terms of fuel costs, it's much worse in Europe. And then during Prime Day, they sold a lot of products during Prime Day, which come at very low profit margins. And alluding to that, it says that they don't make any money on selling these Amazon devices. They make money on the use of the device. So the Fire tablet and other types of things that consumers buy electronic wise from Amazon. Amazon doesn't make money on the sale of the hardware, but it makes money when consumers use these products. The next question comes from Brent Thill from Jefferies and asking about AWS and Amazon Director of Investor Relations Dave Fields talks about the current backlog balance in Q3 was 104 billion, so that was 57% growth year over year. And that's great news for Amazon stock investors. Amid all of these headwinds and bad news that Amazon stock investors got during Q3, this was a good upside here was that the backlog, the orders in AWS increased almost 60%. And remember, this is its highest profit margin part of its business. All right, and I will end here on this last question that comes from John Blackledge from Cowen and Company asking about some details on the cost structure initiatives. Like what are you doing, Amazon, to bring your costs down? And then secondly, tell us a little more about the holiday season, how that's looking so far. And the CFO jumps on to answer and saying that they're very optimistic about the holiday, but we're also realistic that there's various factors weighing on people's wallets, and we're not quite sure how strong holiday spending will be versus last year. That's concerning. We're not sure how holiday spending is going to be. That's uncertainty, and whenever investors see uncertainty, that means higher risk, and higher risk means falling stock price, all else held equal. And so another reason why Amazon's stock price fell following this conference call. And finally, saying that the CFO saying that it's hard to improve productivity in the fourth quarter because it's a period of maximum stress on the operations. So everything is going full tilt, and when you're so busy with going full tilt, you're not really having any time to reduce expenses and look at costs. And so they're trying to fulfill every order in a quick way, but their goal is to leave ourselves in a really strong condition for a fast start on a lot of these initiatives in the first quarter of next year. So if you're an investor in Amazon stock, don't expect any improvements on the cost side in the fourth quarter. That's essentially what the CFO is saying here. And so if you're waiting on costs, look for those more so in the first quarter of 2023. So again, not very good news for Amazon stock investors. The company management is talking a lot about decelerating revenue growth. Revenue growth is slowing down, and at the same time talking about costs are high, and we're not really going to be able to do very much on the cost side in the fourth quarter, right? So revenue is coming down, but we don't have the capacity to work on decreasing costs in the fourth quarter. That's more so going to be a first quarter 2023 issue. So as an Amazon stock investor, the profit outlook for the fourth quarter does not look good. And so as we moved along this earnings call, we really got more insight as to why the stock is down so much after these question and answers were made public. Okay, so that's all I've got for this Q&A session on Amazon stock. If you've gained any value from this video, please go ahead and hit the like and subscribe button. It'll really help me make more videos like this one. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.